Well, we have the CPI release coming on Wednesday, but there is so much chaos with banks still honestly not out of the woods. We got earnings season just starting to ramp up again, and stocks seeming to finally lose steam. This setup just looks awful for this week. So let's discuss the chaos that is the banking collapse and the CPI release coming on Wednesday, and exactly how to handle this possible destruction in stocks this week. I just ask that you gently hit that like button, and if you aren't subscribed and enjoy this kind of content or my videos in general, make sure you click that little subscribe button down there and turn on notifications, because even if you're subbed, unfortunately, if you don't have that button pushed, YouTube is dumb and won't show you any of my videos, even if you are subscribed. And I don't know why, guys, it's just YouTube. And I'm running a flash sale this week for my group, so I won't make the pitch long since that wouldn't be very flash-like. So check out the pinned comment down there if you're interested in 5 free courses, my buy and sell alerts, my watch list with price targets, direct access to me, and a ton more. Just the details are down in the pinned comment below. So we will get to CPI in just a second, but we have to talk about the banks first because that's basically the headline everywhere. Now, I know we've discussed it before, but just to recap, I told you guys I was not concerned with the banking collapse at all, the banking crisis, whatever the heck you want to call it. I wasn't concerned. I'm sorry, I know that doesn't fit the Wall Street or the media narrative or even the YouTube narrative, but after studying the financial crisis for years, this was nothing like that at all. I mean, not even in a ballpark, not even close. So to me, it's just silly to even compare the two. And lo and behold, exactly what we discussed with all this banking crisis noise has played out exactly. We basically had some weak banks that were exposed as, kind of the tide went out per se, and that is actually good for the market, the economy, and the consumer over the long term. That is simply because low interest rates allow bad companies to hang around, and that applies to banking too. Yeah, you guys have all heard of zombie companies and all the other stuff like that going on. That's what low interest rates do. Sure, it's great for some things, but it allows companies to hang on, and it allows other companies, and in this case banks, to mask, really poor management, really poor investing decisions. All the way around, it allows all those things to kind of happen until those rates come up, and then you kind of see, who's swimming without swim trunks on per se. Now, will there be more failures? Yeah, probably so. But am I concerned at all about it? And the answer to that is nope, I'm not concerned at all. Don't believe me? Well, Jamie Dimon doesn't see it either. If you read his last shareholders meeting letter that he put out, he basically doesn't see a concern with this either and basically says it's nothing like 2008 and draws a bunch of great comparisons there. But I'm sure as this whole thing winds down, the next crisis that is guaranteed to happen is kind of, right around the corner. So, don't worry there, guys. We'll have something like that pop up. There will be another event that happens, 100% of the time when this chart does this. So it's guaranteed, even though almost 100% of those type charts that have been perfect since the history of time have been wrong this past year. So instead of those charts, I don't know, maybe try wizardry next time. I don't know. So I'm watching it right now. Don't worry, I do got a watchful eye on it. But right now, I am not concerned at all. But yeah, I know it's going to put pressure on the markets because of the craziness that was the financial crisis and all the scarring and all of everything else that kind of came along with the financial crisis. All right, so over to the CPI release and what I see happening there. And there are basically 3 scenarios that will play out, and I will discuss what I am doing specifically in each one of those scenarios so that way you guys can kind of see what I'm doing and then kind of build your plan around that. So let's start with the positive one first. And that is that we see it finally inflect down into the mid 5s, kind of 5.5, 5.4, 5.6, somewhere right up in there. And if we get this, the table is going to be set for a nice rally as inflation will clearly be trending down at a nice steady pace. And with easy comps coming up this summer, that should continue. That trend should continue to come down as we have easier and easier comps as the summer goes on. So the reason for that rally, basically if that happens, the reason for the rally is because Wall Street, and we know Wall Street's going to do this, they're going to think the Fed will acknowledge the plan is working if the reading comes out kind of in this range, and they may have done enough and basically start talking or stop talking about raising the terminal rate and maybe, honestly, maybe even be a little bit more dovish as well, so that way they know, hey guys, we're basically done here. We're going to think it's over with. Basically, Wall Street will start to trade assuming the Fed's not going to hike us into oblivion as the bottom line. And in this scenario, I will continue to buy stocks as they hit my price targets, and I'm going to just continue my modified DCA to be honest. It seems to be a different stock that I'm buying every week, so I will just continue to be a buyer of whatever the heck stock that is. Heck, back in December, in beginning of January, it was all about Tesla. You can buy enough Tesla because, who the heck doesn't want Tesla at, 128, 118, 108, 104, whatever the heck the number was. I couldn't buy enough of it. And before that, it was Meta, basically in the 80s. Come on, give me a break. Meta in the 80s, that's ridiculous. 90s, anything under 100, I don't know. It's the easiest money I've ever made in my life on those buys. But anyways, the point was, those were the different stocks at different times, and I'm sure it's going to be different this time around as well, and you got to be ready for that. That's kind of where that plan, having those price targets all set and having everything else set up and ready to go is so vital. That way you have it set before something like this happens. But let's get to the second scenario, and that is we see it really inflect down. I mean, like down to the lower fives. Maybe, I don't think it's likely, very, very unlikely, but maybe we even get a 4 in front of it in like a best case scenario. That's what happens. And if that's the case, Wall Street will accelerate and really push stocks up as they start to basically speculate that the Fed's going to be done altogether. And of course, they're going to start slashing rates now because that's exactly what Wall Street does. They just basically speculate and speculate and speculate, which, oh, by the way, over the course of this entire time, most of their speculation has been wrong. But there's no doubt in my mind that is absolutely going to be the narrative that is pushed if this actually happens. The market will absolutely overreact based on their opinion that the Fed's current plan is basically complete. And there's a chance that they get more dovish in their commentary and they're going to cut those rates down. And therefore, basically, the market's just going to have a really big rally on that. And in this case, my strategy is the same as the first scenario, guys. I will just continue executing my buys at my price targets, but I will not get caught up in any FOMO like somebody did back in August and September on that rally. And even this latest rally at the beginning of the year. I mean, a lot of folks got caught FOMOing into that rally too. I think the Fed will stay more aggressive than Wall Street thinks in this scenario. And so if the rally is big, it's going to correct down after the Fed meeting when the Fed basically crushes us again with sticking to their plan and not falling for Wall Street's plan that they put out there. This has happened repeatedly and repeatedly and repeatedly over the course of this past year or so with this rate hike cycle. So I don't think the market will make new lows after that or anything crazy like that. But the rally will pull back as it will be way over aggressive if we get this sort of a number. And lastly, we have inflation coming in hot, guys. I mean, like not moving at all, or maybe even going up just a touch. Then I don't think the market will do anything except just basically sell off immediately. They're going to immediately start to sell stocks because we all know that not only will the Fed continue to be aggressive, they will obviously raise their target rate significantly higher again. So basically, that's kind of a lose-lose scenario there all the way around. So that's going to induce strong selling pressure into the markets. Now, probably not as bad as the YouTube or the media is going to make it out to be, but it will create big selling pressure in the markets once again. And in this case, I'm going to do something a little bit different than the first two. I'm going to basically do two things. The first is I will still be a buyer, but I will be selective as when you have a big fear event like this, the VIX is going to spike up like crazy. And honestly, guys, the sell-off is going to last a lot longer than a day. It's going to be, probably several days, maybe even several weeks. So in that case, waiting a few days, maybe even a few weeks, you got to watch it, stock by stock. It's going to be different all the way around. We got to kind of see how the market digests everything and what the Fed's commentary is and everything. In an event like this, I'll be honest with you guys, I will buy as much of the fear as I can during that time, just like I was doing in June when we hit that low and in October when we hit that low and basically through the whole rest of 2022 because the prices were just stupid and the fear was so high in so many stocks that we absolutely love. And that is where planning is so critical to investing. And that is exactly what we preach in our group, guys, and on this channel all the time. Do evaluations, setting your price targets, buying the fear, and being patient and saving and working to put away cash for the next opportunity when the market basically has a big rally up. And that is one of the biggest benefits of being in the group is having that support there. But I mean, I'm also a bit biased because I also think it's great, but you don't need that, guys. If you're doing your planning and you're doing all the other due diligence that you need to do, you basically just need to stick to your plan. That's it. That's all you got to do. Keep those emotions out, keep them completely out as far away as you can, and you're going to be just fine. You're going to do great in these types of markets. But let me be very clear about this one point. If Wall Street wants to get stupid again, please let them get stupid, guys. The average bear market only lasts 289 days, and we are well past that now, depending upon when you want to start it. No matter when you start it, we are well past that territory now. And by the time it flips and the numbers look good, and you have, confirmation that the bear market is over, guess what, guys? We're in the middle of the next bull run, and you are way behind on the bottom, sometimes in years, depending upon which crash you want to look at, as to how many years you were behind from that bottom. So I will not let opportunities pass me by waiting for this indicator or that indicator or anything else like that. Just like during, basically the downtimes last year, during the financial crisis, during all those other times, I'm going to be buying because nobody can time that bottom perfectly. I've never timed it perfectly, ever, not even close. And I don't expect to do it now, but I know I'm going to be buyer during those downtimes because over the long run, those buys are going to look really, really good if you're buying great stocks. I hate to burst the bubble here on YouTube and in the media of all those smart folks, but there is no indicator or formula that tells you when that is, so it's absolutely useless to try to time that event or try to figure it out or anything else like that. Just put yourself in a spot that no matter what happens, no matter what, you are in a win-win position as a long-term investor. And if you want to learn exactly how to do evaluations, set price targets, you want to see my buy and sell alerts and how I set price targets, where I have those are, what stocks are on my watch list, you want to take 5 courses for free, have access to me, have access to the best Discord group out there, and a whole ton more, guys, make sure you check out the pinned comment down there and see if a group membership is right for you. And click this video here if you want to see exactly what stocks I'm buying in this market, and click here if you want to see exactly what my plan is for this market. So thanks for watching, and we'll see you in the next one.